All right, guys. It's 6:23. This is like the pre-6:30 show. I wanted to make sure that I can get online and that we got the charts, we got our system go up. Again, like getting in the pilot seat, you got to say like, oxygen, gas, this, that, check everything out. I want to make sure it's on here, which it is. So that's good. All right, we're going to get our connections going. We got to get this off. And in the morning, gotta make sure everything's set here. And I feel like we're almost there. Let me just check a few more things before I say hello to my dogs. Yeah, Iron Eagle, I remember that. Okay, let's see. Hold on. All right. Put this over here. All right. Thanks for the incredible insight. Allowed me to turn around my losses. I love to hear that. I actually had a group of individuals from around the country come in for a Redler Ultimate Access a few weeks ago, and I helped teach them, my process, my routine. They watched me every single day, and they're like, wow, I got to start putting in more work because this ain't easy, which is true. So anyway, my name is Scott Redler, Chief Strategic Officer of T3Live.com. This is what I call the 630 Club. I'm trying to change it up a little bit so the charts could be a little more clear. I'm not holding the phone, and this way I could add some more value to my friends and my dogs around the world. So let me say hello to some guys. All right, who do we got? What up, Faris? How you doing? What up, Maryland? By the way, Chase's favorite team is Maryland. We got Armenia in the house. That's cool. What else we got? We got Itz. Come on, where's Itz? You're always around. My friends in Ukraine, I'm sure, are a little on edge, but what they're telling me is that Putin's looking for a way out. He's looking for a way to save face. It's got bigger than he ever thought, so he's got to figure a way to not have an escalation, but also not look like, a puny little boy. No, I'm kidding. Anyway, we got Steve from Cape Cod. We got Romania. My grandparents were from Romania. We got North Carolina in the house. Who else we got? What are you guys, sleeping? I know it's 6:25. I'm early. I'm even going to take my jacket off early. We got a lantern in the house. All right. Oh, I got to stretch out. Anybody do any fitness this morning? I already went to my sauna this morning. I looked at what's happening around the world. I looked at what the futures are doing. I looked at what Europe is doing. Europe's got some green hours. Asia's back from the holiday, but the Shanghai tacked on a little bit more. And our market is in a very, very indecisive spot. What does indecisive mean? Come on, common sense means it's not exactly sure what's next. We have the Fed that still needs to reduce the pace of purchase to 0, and then we still need to raise rates 3 to 5 times. And here we are, with the S&P hitting a low a week and a half ago. The oscillator's back in neutral, and we're getting some faulty signals here and there telling us that, hey, maybe this corrective phase isn't over. So right now the active bulls are trying to figure out if they could have any kind of constructive nature and figure out what's happening here. The market does feel a little weak. If you guys remember yesterday, I gave 3 clues. What were the 3 clues that I'm like, this is what we need to watch to figure out if the active bulls could try and be a little constructive, just a little constructive, or was that the oversold bounce and now we have to be very careful and keep risk off? I came in yesterday with a little bit more risk on because of Friday's action, and then yesterday, I took some risk back down and I'm going to be a little more flexible. Any of you guys? All right, yeah, Google, right? If the market was that strong, Google would not have given up its entire earnings gap, but I'll get into that after. Facebook, yes, Facebook also broke that 230 area. If the market was going to be at all actively constructive, Facebook would not have broken 230. What else? My friends know what they're talking about. Yeah, and then you had Netflix. Netflix wasn't really that much of a clue. And then you had Tesla, which tried to break above a level and failed. All 3 of those things told you that, hey, maybe this market, needs a little bit more time. Maybe I have to be a bit more careful. So let's get to it. So right now the futures are flattish. If you look over here at this is the chart of the SPYs. You have an inside range. Okay, what's an inside range? An inside range is a bunch of days which are within a certain candle. That means the market's consolidating. It's not exactly sure. And usually you have some little violent moves of distribution before it decides which way it wants to go. So at this point, if you do remember, we did very well, okay, with the red dog reversal low here, right? This was your red dog reversal low. Here was your 4-day active bounce into resistance, okay? And then on Friday, you did have a little bit of support, okay? And then yesterday, we had an inside candle. So now what? It's kind of hard to tell. You know, I personally think on a narrative basis, not an active trading basis, that why wouldn't we retest the lows from a few weeks ago? But I'm going to take it, you know, level by level. And look for clues like yesterday. Yesterday I actually made some really good money because I honored my stops and I took trades. That's what traders have to do right now. You can't sit around for much more. So the question is, yeah, will this be another inside day or not? Some people want to cheat a little long. Some people want to cheat a little short, but it's hard to get aggressive when you have the CPI on Thursday. Okay, right now the market's still obsessing about inflation. So the question is, are we going to have a hot number, okay, which will then trigger a sell program in tech again, and then maybe we roll back down and the SPYs break below 445 or 444 to, you know, see what's happening in here. You have a pretty big void. Or is it less than feared, which is kind of what spurred this rally? Remember on this day, we had Friday morning economic data that was less than feared for inflation, and that's what caused an oversold rally. But we're not oversold anymore, so that fuel for the fire is not there. So if it's less than feared, you know, hey, maybe there's another, you know, break a little bit to the upside. But again, today's Tuesday. Either we're going to sit in this range or they might even cheat a little bit before. So you have your levels here. You break and close below 445.85, then you have 444 below 444. It gets sloppy. All of a sudden we start taking out this way. You could draw your lines. You can go like this. Okay, say, hey, if we get above and stay above here, there'll be some shorts that are squeezed. If we get below and stay below here, some stops are going to go, and we could go to the downside. You know, if you do remember, I was telling you guys how on the weekly basis, right, the weekly and monthly basis, you still have to be a little concerned. Why? You go to the monthly chart. Okay, let's actually go to the weekly chart. You can see it a little bit better. All right, here you have what I call a head and shoulders top pattern. Okay, if you remember back here, I showed you guys the taper tantrum. I want you guys to be able to see it. It was right there. This was 2018. In 2018, the Fed also had to reduce accommodation. The Fed also had to raise rates. And what happened in 3 months? The S&P went down 20%, and the Qs or tech went down 24%. That was right here in 2018. Okay, and then this was your, remember when we broke the 821, they got out of the way for the pandemic, and then had a red dog reversal buy. Wow, those were great times. I had my best year in 2020. But anyway, so did a lot of traders. And then, but look what happened since, because of all the accommodation, all the stimulus, all the checks, everything going out. So now what? The question is this a head and shoulders top pattern? Okay, is it going to build a right side of the shoulder? Remember, look, I told you how long it took to build the left side. Here's your head. This was one trend that broke, another trend that broke. All we did is retest that right there. So some guys sold a lot of longs. Some guys started buying puts a month out. It all depends on how you want to play it. So the question is, here's 420 from, you know, what was that date? January 24th. Now all we are is right here. Is it going to stay within this? Okay, and hold higher, or is it going to start to roll back lower? Which it's hard to tell. Something that'll give us probably some clues is tech. So let's go back to the daily chart of the Qs, which also have an inside range. Okay, here are the Qs. You know, if you look here, this is what I call a wedge formation. Back in the day, I don't know if you guys remember Mark Haynes. Mark Haynes and I were on TV together for the entire financial crisis with Erin Burnett. I was on every single week. And one day I said, Mark, there's a wedge building on, you know, in the market. He goes, Scott, is the wedge going to give the market a wedgie? I'm like, come on. I'm like, all the wedges is a pattern of indecision, trying to consolidate a move before another move happens. And after this move lower that we had, okay, the market did an oversold bounce into resistance. So it's not sure, does it want to take one more move up into major resistance, or does it want to roll back lower? So how do you judge that? Well, 353.84 is one pivot. Gets below that, then 351, it gets below that, chances are it's coming back to the downside. So yesterday, remember we talked about Google. If the market was that strong, you know, Google would have held the earnings gap. This post-earnings gap is gone. That means all the pent-up power that it did to gap up was let out. Why was it let out? Well, I think Google did a little bit of a fugazi. You know, they did a 20-for-1 stock split, but it's not till July. That means if you want to sit through for the stock split, you have a whole nother earnings, you know, report to sit through. So like, oh, well, the earnings weren't that good. It's going lower, but I'm going to sit through for the split. I don't know, kind of weird. What they should have done is announce a split, and within the next 3 to 4 weeks, stock splits, and then you could have your amount of shares going into the next earnings. So anyway, either which way, this earnings gap is now gone. It is no longer special. Now it's just like everything else, and it couldn't hold that momentum pivot right there. That was one clue that, hey, what up, buddy? Park City's there. So anyway, so that shouldn't have happened. And then once we got below 29.12, if you were thinking, hey, I want to be in this thing because I think it's going to act special, that right there could have told you, be careful. Very careful. Anyway, what else? Facebook. The market was going to be okay. Facebook would not have, broke below 230.11, which it did. Then it tried to give a red dog reversal bounce. And then yesterday, it got below this prior pivot, which was, no, this is your 230, I'm sorry, to hit 224. Wow. Okay, I actually made a little bit of money short Facebook as it was sitting there showing relative weakness. But that shouldn't have broke and closed on the dead lows if this market was going to say, hey, we're trying to hold up here. It's more like the market saying, hey, we don't need to buy this yet because we're going lower. So what do I do sometimes? I go to the weekly chart, okay, to see where there could be support, which this 245, 250 broke. So now what? This is like 208. You could actually even go to the monthly chart. That's what happens here. When you're in a corrective phase, you got to go further back. So right here, this is where it broke out from back in, when was this? This was April of 2020. Okay, if you look at it, this was look at this candle. Okay, that took out the prior low right there that said Facebook or Meta, whatever you want to call yourself, on a macro basis is a little fried. Anyway, then it broke here, and now what would I say? I would say 205-ish. Okay, 205-ish. You know what? I'll be selling some puts and I'll be looking to get long if it sees it. So 205-ish is probably an area that I would think could hold. So sometimes it's like a zone. Okay, you could draw two lines here even. Like 195 to 205, this would be your macro spot, in my opinion. So if sometimes you want to do what's I call judo, which is like you kind of want to look for a reaction before the other reaction. That's not really judo, but I didn't take judo. I wrestled. Anyway, meaning like you want to look ahead and figure out where or what zone could be interesting or compelling, because when it's in the moment, everyone on TV will probably be talking about how Facebook's going to 150, but chances are when they get the, Facebook in turmoil segment, that's when you're looking for an oversold bounce. Anyway, so 205 into this area. What's the slow here? This is 198. So I would even write that in there. So that's probably a spot. I'm not saying it's got to get there, but that's where I would think we're compelling. And when you're in some kind of craziness, you always want to go where it's kind of compelling. So let's go back to the daily chart. Yesterday, right around this time, if you remember, I was buying Tesla, like, what was it, at 920 pre-market. It had a nice move. I was thinking, hey, if we have another constructive, active day where you can make some money, maybe Tesla gets above 936 or 940. But remember this, write this down, get above and stay above. If you're playing a stock to get above and stay above an area, it's got to do that. If it doesn't do that, you adjust. If it doesn't do that, then there has to be a different reason you're in it. Same way if you're looking to short something, it's got to get below and stay below a level. And that means the bears have enough power to keep it below to be short. Like yesterday at 230, Facebook got below and stayed below 230, and you could have made money. Yesterday, Tesla tried to get above and it failed. Okay, look right here. It tried to get above this, what was this, 937, 940 area, and hit 947 and couldn't hold it. So right there, if you were playing for it to get above this area, okay, you had to get the hell out of the way. If you're in it from here and said, hey, I wasn't playing for it to get above this, I was playing for it to hold 880. So then that's the type of trade you're in. So you have to know what type of trade you're in. So now for today, I don't know. Okay, yesterday's low was what? 902.71. So let's make this 902.71. It's kind of in no man's land. So I would wait for a signal and see what's next here. It's still hanging in here. Some are thinking, hey, you had your head and shoulders top. It's still below the moving averages. It was just an oversold bounce that was really calculated from the 829 red dog reversal into now a red dog reversal sell. So, who knows what's next here. But if all of a sudden, Tesla is down 10, 15, 20 points, and you might say, hey, wow, the Qs probably break this inside range to the downside, and then you start connecting the dots. You could use get above and stay above for anything. Remember, DWAC was a great trade for the past few weeks, and then I was a little excited. I'm like, hey, maybe DWAC is going to get above and stay above 91 because that's your point of reference. And if it does, we can get some kind of additional move. So DWAC did that. And then look what happened. It got above 87, got above 91.50 at 97. So there was ways to use your tier system. Just say you were in 1,000 shares here. Okay, and you added another 1,000 through 91.50. Now you're in 2,000. You sell some along the way. Okay, and then you're like, all right, I'm going to sit in 500 to see if there's any more upside. I just made good money on 1500, and then all of a sudden breaks below 91.50. You get out of the way, and now it needs time to rebuild again. But if it was going to get above and stay above this 91 area, there was a lot of room here. What did it decide to do? Fail at the end of the day because there was some rumors about an offering. Stocks don't like offerings, but companies want to take advantage of higher price, and I think that DWAC hit at 25 billion market cap yesterday, and it's not even a business yet. So anyway, how my dogs doing? It's 9:39. SoFi, it's not really been acting so great. I got stopped out of it yesterday. I've been trying to try a few things and give things a little bit of the benefit of the doubt, but I'm more in like college mode, love them and leave them versus married with kids, which is what I have now. Anyway, so there's all different phases of your life. My market phase right now is I'm trying to be tactical. I'm trying to take advantage of moves, and I'm trying to figure out what's kind of next year. Peloton earnings, I don't know. Yesterday we spoke about Boeing. So if you want to take a look at Boeing did give you a nice little move, had an inside range. So just like the SPYs or the Qs, you can get a nice little trade here. And some guys were long versus this spot and said, hey, Red Dog, what happens if it gets above this 209? Can it be a trade? I was like, yeah, looks pretty tight. Not so bad. So if you did that, congratulations, you made some money in Boeing. But I would just be careful. It does have it has some room to this descending little trend line. And I do think you're going to get a reopen type of trade one more time. I know in New Jersey they're listening to masks. Thank goodness. Let the kids goddamn breathe and let the teachers go to work. But no, I'm sorry, I'm not going to talk about any of that. So I do think that a lot of reopening type stuff's going to happen. The spring's going to be blockbuster. Let's hope that we don't have some bottlenecks and everyone goes back to work. So we could fulfill the demand of the economy. Sorry about that. CFVI is kind of bouncing. It did the same type of thing as yesterday. What else do you want to look at? Oh, sorry about that. TTD, I haven't looked at TTD in a while. I'll take a quick look. It looks like you had your bounce into the moving averages. So, I don't know. I'm not looking to all of a sudden start trading those names again. I know some trade software, some trade SaaS, some trade this, some trade that. I like to focus on my go-to list of about 40 names. Some guys like, hey, what about Netflix? I don't know. Netflix gave a nice calculated move right around here is when news came out that Andrew was buying it. It took out 408, went to 458. That was a nice trade, and then it broke this little inside area. And now it's struggling to hold sideways to maybe be relevant again. But for Netflix, it got as good as it gets. They stole subscribers from quarters and years ahead through the pandemic, and now you have all this competition. So it's going to need a lot of time, need a lot more activists and a lot more insider buying. So AMD, when the market's strong, AMD tries to be a little strong, but you had your Red Dog reversal here, gap up into earnings. Remember, I'm like, I think you could be a seller into 130, not a buyer because you knew where it was coming from, and now it just needs time. Listen, guys, at this point, the market does not know exactly what's happening. Everyone's going to have opinions everywhere. You're going to hear people on TV say, we have to test the lows. Then you're going to have the people on TV say, we just had our correction and the economy's strong and we're going to be at new highs. So at this point, I don't have a strong opinion. I came into this year saying, hey, the Fed's going to be a headwind versus a tailwind. The Fed's going to reduce the pace of purchase. We just had a huge run. Over the past 3 years, the S&P was up 20%, 17%, 27%. The historic rate over 100 is 7%. So how could you be so excited? But so we could have months of this. We're still the Fed still hasn't reduced all the pace of purchase yet, let alone raise rates. So we had just remember what happened about a month ago. But there are things to do. Listen, crypto is fantastic. I was a little edgy myself. January 20th, 21st, when I was out there and everyone was hiding underneath their table, I'm like, yes, I just went from 75% cash to only 10% cash. With Ethereum going from 2,500 to 2,200, I was buying my 6-7 altcoins in the hole and I waited. Okay, and now my crypto accounts are almost the highs of the year, and Bitcoin is well off that because I used my active approach. What's my active approach? Well, just like in the market, when you're below the 821 day, you get the hell out of the way. So with Bitcoin, okay, when did it break below the 821 day? Right here, 63.5 after a Red Dog reversal. At a Red Dog reversal, just like I showed you in in DWAC or in Tesla, right here after a big move. That was loose and wide, and then right here is when I went to 75% cash, and I stayed that way during this entire time. saying I want to be careful. Growth stocks are getting under pressure. This is the biggest growth risk asset out there. And then finally, into this move, I started to really get aggressive, and I was a little worried also. You could have waited just for a red dog reversal at 34K when it went below, came back above, or you could have waited for this buy signal on Friday. I posted the chart beforehand, and I said I'm buying even more of my 6 to 7 little altcoins that all jumped 20 to 40%. So anyway, that was here. So into this resistance, what am I doing? I am reducing. So now I'm pretty much back to 50% cash after down here being all in again. I have no margin. I will never be on margin. Okay. In my trading accounts, yes, that portfolio amount margin is different. It's P&L, this and that. But if you're trading like retail, or you never want to put yourself on margin because you can get stopped out if something happens. Same thing with crypto. Don't be going 10 to 1 in crypto, and then all of a sudden something happens overnight. Your stops don't get hit, and they blow up your account, and then you owe them money. That happened a lot in 2000. No, you got to be responsible, boys and girls. Boys and girls. Anyway, so what a nice move. That made me happy. I made a lot of money back. I was begging you guys to buy Gala below 20 cents. It almost doubled. I was begging you guys to buy Sol at like 95. It went to 120. Matic at $1.40. It went to 2. Mana below 2. It went to 3 and change. There was a lot of nice moves there. So anyway, hopefully you made some money. Now we'll wait and see a little bit and not be in a rush. Don't be in a rush. Okay, respect the money, respect the P&L. 2 weeks ago it was a little harder to come by. Now who knows? Maybe we get back into another phase like that. If the CPI is higher than 7% Thursday, Fed will raise rates. Okay, that's your opinion. Okay, yes, if the CPI is that high, chances are this inside range that we were just looking at in the Qs breaks to the downside. This move lower, bounce back, bear flag probably goes to the downside if the CPI is hot. If the CPI is not hot and you're playing for that, though, you better be careful because it could be another squeeze again. But we shall see. Listen, guys, at 6:45, this is the new setup. I'm going to try and get consistent. You know me, I'm not a friggin' administrator. I'm more of a, get in there and get my hands dirty and, fight it out. That's why I have Red Pup. He helps me do things like this. He put this together so this way I could be live on YouTube and also on Instagram. Listen, if you're watching this on Instagram and I look like that on your phone, that's because Instagram doesn't pick it up well. You're better off watching your desktop or going to Twitter. At this point, I have a little less risk on. I'm going to also see which way does this inside range break and try and jump on a few things. It's been a nice run since those lows, and also there was a nice way to short into resistance. And right now, when it's in an indecisive spot, you wait for some clarity. Don't be in a rush. If you're in a rush, you're going to do stupid things. We don't like to do stupid things. We like to do the right things, right? What did Bosch say? When the game is on the line, it's not about taking the last shot. It's about making the last right decision, whether it's a pass, whether it's big defense, whether it's even sitting on the bench, because you don't deserve to be in the game to be there when it's tied up. So in your head, you have to figure out what's the best situation, what's the most high probability situation, and if it's not compelling, you know what? Cash is a position, and you're allowed to sit on it and wait till you get into a more compelling type of situation. Thanks for tuning in. I appreciate my dogs around the world. We're probably going to try and do this. Thank you, Coach. Another coach. I have a lot of coaches on here. You know why? Because we're like-minded. We're disciplined. We're creatures of habit. We like our routine. We drink our iced coffee. We get set up. We get ready. We get prepared. If you're prepared, you can execute. If you're prepared, you can have confidence. If you're prepared, what do they say? What's luck when opportunity meets preparation? It's not really lucky. It's just you're doing the right thing to put yourself in a position to win. Thanks for tuning in, guys. I'll see you later.